Hello guys and girls, welcome back to my YouTube channel. So on yesterday's video we did analysis on volatility 75 index, and we said that volatility 75 index is going to buy. And for those who did join my Telegram group, whose link is in the description below, we did take this trade together. And as you can see, this is just single trade from just a simple concept that I'm going to explain it to you in the next few minutes. It made us almost $20,000 USD, 20,000 with just this simple concept. And we made this in just a single day. This can be someone's yearly salary right here, but we made it in a single day. And luckily for us, this trade was shared on the Telegram group, whose link can be found in the description below. So if you have not joined the Telegram group, make sure you do that, and the link can be found in the description below. So what made us enter this trade? If you're new to day trading, I will explain to you step by step on how you should trade this volatility 75 index in the near future. So we know volatility 75 index, this movement is a result of this head and shoulder pattern. And the extra concept of head and shoulder pattern is we know that the distance between the head and the neckline is the approximate distance that the market will move to its take profit. Okay, and that's why we did use this measure right here, this measurement tool right here. So we can see the moment the market came to this movement right here and it approached this major support level, it went back up and it came back down. It went slightly up, it came back down to form some kind of a triple bottom pattern before actually deciding to buy. So right now we can say that this downtrend or bearish movement as a result of this head and shoulder pattern is officially over. And right now on volatility 75 index, we are to look for very bullish trend. And how is that? Because you can see this $25 account can make me a lot. It can go even to 100k with just this single trade if it plays out, since we know the principle is still the same for these kinds of pattern. And this pattern right now is a triple bottom pattern. We know the distance between this neckline and these two legs is the approximate distance that the market will move to its take profit. Now I'm going to be honest with you, this is not some kind of a thing that will go just as a clear as a straight line, although there may be exception to this kind of trade. Like for this case right here, you can see the market did not provide any room for any kind of retracement. It went back up, but you should be very careful. Do not just say, okay, I may miss this trade and let me just hop in just blindly so that I can keep riding this trade and have fear of missing out overcome you. No, the moment the market, until it reaches this kind of levels, we will get a lot of new entry opportunities for those that missed this trend right here. And by that I say we will get these entries together in the Telegram group. So I will urge you to join the Telegram group, because on that group is where we will get this kind of movements together. And you can see just simple movement made me a lot of money in just a single day. So I will be explaining, apart from the concept that I said, the distance between the head and shoulders pattern, head and the neckline is approximate distance of this market that will move. But that it was not necessarily our conference alone to enter into this trade. So I'm going to explain to you on how we could have gauged a proper entry on these kinds of patterns, so that in the next near future you will be competent enough, because you will be competent enough to trade on your own, because the markets are just the same. This kind of double top pattern, the double bottom patterns, they have been there since I was in the high school, and they're still working out today, where I'm almost about to get married. So you can see these markets are not going anywhere. It's very good if you trade and you learn now. So let me go to the 1 hour time frame so that you can get a more zoomed in picture of this kind of pattern. So you can see right here on the 1 hour time frame, and for those who follow me enough, they know that on the 1 hour time frame I just look for the candlesticks anatomy, because on the 1 hour time frame these candlesticks play out very well. So the moment the market formed this kind of a double of this kind of a doji pattern right here, it gave me a confidence that this market is going to reverse first. Why? Because we have a doji candlestick. A doji candlestick, it is known that this kind of candlestick is a reversal candlestick pattern. So it is very logical to trade this kind of a reversal candlestick pattern. Why? Because we know this trend that the market, this trend that came as a result of head and shoulder pattern is over already, because this distance you can see has been covered to almost 95%. And likely for us, we got a doji candlestick, and we know a doji candlestick is a reversal candlestick. So if you connect the dots, you can say, okay, this, I know the market was on a downtrend, and I know that the distance that it was supposed to move on a downtrend is over already, and we have a doji candlestick. Again, a doji candlestick is a reversal candlestick. And where did this doji candlestick occur? It occurred on a major support level. So, and what's the market likely is about to react to when it approaches the support level? It's very simple. The market likely does do some kind of bouncing off when it approaches this kind of levels. You can see right now the market is on a resistance and is having difficulties in penetrating these levels. So that's just a simple concept. Although for those who enter this trade right here, only those who with huge capitals, let's say $1,000, I urge them to enter this trade right away. So let's say you were trading low, maybe you have a $50 account, or maybe you have just a minor account of $100. Having your entry right here and your stop loss right here, that will be just insane, because the stop loss would be so huge for you. So that's where we go to the 50-minute time frame, because on the 50-minute time frame we will get more tight entries with very minimum entries. So what we look on the 50-minute time frame is the change of the market structure. So we can see that this market previously was on a very short-term downtrend right here, by considering this movement alone. So how could we enter this trade is, we know how the downtrend market moves. The downtrend market moves in series of lower lows and lower highs in this way, right? And we know for a downtrend market to be to be over, then the previous lower high has to be broken. So once this level is broken right here, that is where we say we have a change of the market structure. So since we know that this market was going to buy no matter what, so we observe this trade right here and we say, okay, the market was moving in series of lower lows very beautifully, as you can see, lower lows, lower highs. It broke this structure, so this was our lower high of this downtrend movement. So as long as the market broke this level right here, this was our entry conferences, and this was another new entry that we entered with lots of entries right here, and with a very tight stop loss of just below this candlestick wick right here. And as you can see, guess what, peeps, we risk very tiny bit of amount of money, and right now we are on a deep reward.